Iran, the bully of the Middle East, must now make peace. If they do not, future attacks will be far greater and a lot easier.
The world must not forget that it was the United States which, in the midst of a process to forge a diplomatic outcome, betrayed diplomacy.
Through their actions, the U.S. has opened a Pandora's box.
The
actions of the United States seriously violate the purposes and principles of the UN Charter and the international law.
The U.S. airstrikes on Iran have raised geopolitical risk, pushing the region into uncharted territory, with Iran warning of retaliation and the world watching whether China and Russia will jump in to support. Live from Beijing, this is Insight with Haslinda Amin, where we dive deeper into the story with crucial context and sharp analysis.
We set the Iranian nuclear program back substantially last night. Whether it's years or beyond that, we know it's going to be a very long time before Iran can even build a nuclear weapon if they want to.
The U.S. says its attack on Iran's nuclear facilities has set back the regime's uranium enrichment capabilities, but it's also created a monumental new challenge to work out what's left, where, and how much. We discussed that with Najmedin Meshkati, Professor of Engineering and International Relations at the University of Southern California. He has inspected several nuclear power plants around the world, including Chernobyl and Fukushima. And also joining us is Andrea Stricker, who researches global non-proliferation at the Foundation for Defense of Democracies. The U.S. attack has introduced greater complexity for central banks around the world, with a jump in oil prices and a threat of higher inflation. The focus now is on whether Iran will shut the Strait of Hormuz.
People that should be angry about it are the Chinese government, because they take a lot of their oil comes through there. So they should be the first ones that are saying if they mine the Straits of Hormuz, the Chinese are going to pay a huge price.
So should China be concerned? We'll discuss that and how a spike in oil could affect the investment outlook for other assets, including equities and bonds. Andrew Lipow, president at Lipow Associates, and Jessica Tea from JP Moran Asset Management will give us their thoughts. Our top story today, U.S. airstrikes on Iran putting governments and traders worldwide on edge. The world is awaiting a response from Tehran after President Trump decided to deploy bunker-busting bombs to strike the heart of the regime's nuclear sites. The move has pushed the Middle East into uncharted territory, raising geopolitical risk in a world economy already facing severe uncertainty over his trade war. The State Department has also issued a rare worldwide caution alert for U.S. citizens after Iran said it reserves all options to respond. While markets in Asia are facing some pressure following the attack, oil prices paring gains, though, after a global benchmark Brent surged at the open above $81 a barrel. U.S. officials have repeatedly said that Saturday's strikes were not intended to spark regime change in Iran. President Trump touched upon the subject on Truth Social, though it was unclear under what circumstances he would support it. For more, let's bring in Bloomberg Horizons Middle East and Africa anchor Jumana Basachi in Dubai. And Jumana, we see Trump floating the idea of regime change, but it may not be that simple.
Yeah, well, they're actually giving contradictory comments on that particular topic. Yesterday in the press conference, the Defense Secretary Pete Hegseth said that the goal was not regime change. The goal was to ensure that Iran does not go on to develop a nuclear weapon. It's not an open-ended war, and that the strikes were targeted and specific to those nuclear facilities. They're not targeting they're not targeting civilians. But overnight, President Trump once again put out a post on Truth Social saying, even though it's not politically correct to use the term regime change, if the current Iranian regime is unable to make Iran great again, why wouldn't there be regime change? So sort of floating the possibility of outside forces engendering some form of a forced regime change within Iran. Now, the reality is the Iranian regime even before this war started, was already weakened, set back by years of economic sanctions and an economy that has been struggling. And of course, the last week has really torpedoed a lot of the efforts that they put into developing their nuclear programs, with the sustained damage at their nuclear sites. Their military defense systems also have been severely damaged as well over the course of the last week or so by those Israel attacks. And then on top of that, you also have the pressure coming out from the external world about what the future is going to look like for the Ayatollah, given he is coming on in age. There's pressure on him also to name a successor, and he did so over the course of the weekend. That being said, what happens in times like these is the Iranian public tend to rally behind the flag. And of course, there isn't a lot of love, you would say, from many of the Iranian public towards the regime. They are theocratic, obviously a dictatorship, autocratic regime, which doesn't leave a lot of room for dissent or for political opposition. But I think there is a feeling amongst the Iranian public that they would rather the decision about who their next leaders are going to be come from within, as opposed to external voices dictating. But also, I just want to remind everybody, there isn't a unified opposition right now in Iran, because there's no room for unified opposition. So even if they wanted to mobilize, it could take months, if possible years, to get that unified opposition and potential alternative to the Ayatollah and the supreme leadership in place.
Jumana, suffice to say, it's a much weakened Iran, but it can still inflict a lot of pain on the U.S.
Absolutely. And I think the question now is, how is Iran going to retaliate to these strikes? Are they going to go for a proportionate response, which is what they threatened to do last week? And remember, in some of the language put out by the Ayatollah, he said if the U.S. were deemed to be participating militarily, they would then also in turn face irreparable damage. Now, what that irreparable damage looks like, they could go for the extreme option of looking to cause disruption on the Strait of Hormuz. But again, many people are saying that this would also be a bit of an own goal for them, because they need that access. They need their own oil exports to continue to make their way to China, which is the biggest buyer of Iranian oil. They could also look to target U.S. assets within the region. Now, most of those military assets, servicemen, are actually deployed amongst those Gulf nations. So if Iran should choose to go down that route, not only would they be opening up a front with the U.S., but they'd also be disrupting a relationship that is newly rekindled with some of their Gulf state neighbors. The final option, of course, would be to telegraphed to the U.S. beforehand that they were going to do something similar to what they did with the Qasem Soleimani response back in 2020, when they hit a U.S. airbase in Iraq, but there were no fatalities recorded at the time.
Jumana Basachi, thank you so much for that. Bloomberg Horizon's Middle East and Africa anchor Jumana Basachi in Dubai. Now, President Trump used his address to the nation to declare the U.S. military strikes on Iran's nuclear facilities a complete success.
Our objective was the destruction of Iran's nuclear enrichment capacity and a stop to the nuclear threat posed by the world's #1 state sponsor of terror. Tonight, I can report to the world that the strikes were a spectacular military success. Iran's key nuclear enrichment facilities have been completely and totally obliterated.
However, independent analysis has yet to confirm Trump's claims. Satellite images of the Fordo nuclear site taken on Sunday show new craters, possible collapsed tunnel entrances, and holes on top of a mountain range. But the images also show a large support building which may be used to control ventilation for underground enrichment holes still undamaged. The IAEA, meanwhile, says it's detected no release of radiation from the site. In a social media post, Trump rejected questions about the effectiveness of the U.S. strikes, saying monumental damage was done and obliteration is an accurate term. Trump also referred to the building seen in the images, saying the strongest damage took place below ground level. But the U.S. strikes also drew swift reactions from the Chinese and Russian envoys to the UN.
美方此举严重违反联合国。
The actions of the United States seriously violate the purposes and principles of the UN Charter and the international law, as well as Iran's sovereignty, security, and territorial integrity. It has exacerbated tensions in the Middle East.
Through their actions, the U.S. has opened a Pandora's box. No one knows what new catastrophes and suffering it will bring.
Let's discuss the potential repercussions of the attacks on Iran's nuclear sites with our panel of experts. Najmedin Meshkati is Professor of Engineering and International Relations at the University of Southern California. Also joining us is Andrea Stricker, Deputy Director at the Foundation for Defense of Democracies and an expert on nuclear weapons proliferation. Good to have you with us. Andrea, let's start with you. President Trump talked about monumental damage, that most of the damage, the biggest damage done is below ground level. Talk to us about how much clarity there is in terms of the extent of the damage at the 3 nuclear sites, especially Fordo.
Thank you for having us, Linda. I think the atomic weapons program and the multiple nuclear facilities that were struck have dealt a major blow to Iran's ability to make nuclear weapons in the short to medium term. The program is likely set back by months, if not multiple years. And the work that the Israelis did prior to Trump getting involved in the U.S. strikes really took out the key weapons building capabilities of the regime. So from facilities to equipment, documentation, and even scientists. So I think Iran is set back significantly. And while we will await a battle damage assessment on what happened below ground, I don't think there's any serious concern about making nuclear weapons in the short term.
Najmedin, we had the president say that the nuclear sites were totally obliterated, but the IAEA says no rise in radiation levels seen so far. How are you reading all of this?
Thank you, Ms. Amin. My information is based on the IAEA reports. In fact, the clip that you showed from UN Security Council meeting this afternoon, I have a copy of Mr. Director General Grossi's report over here. Director General Grossi uses a very careful language. He says that there is no radiation off-site, meaning the release of radiation off-site. And I think this language is chosen very carefully. And what I would say, and I rely upon IAEA report because there hasn't been an independent non-governmental analysis yet. I would say there has not been an off-site release of radiation from Natanz, Fordo, and Esfahan. But my biggest concern as a person that has been in nuclear safety is Iran nuclear plant in Bushehr and also Tehran research reactor. As Director General Grossi said in part of his speech on last Friday's Security Council meeting. That's very serious.
Andrea, isn't it true that a significant amount of enriched uranium stockpiles have been moved to undisclosed locations? Some say perhaps Iran still may have the capability to reset.
That's correct. There's actually around 9 to 10 weapons worth of highly enriched uranium that Iran may have moved, maybe even more, that's considered highly enriched to 20% level. We have reasonable intelligence as far as what Israel and the United States believe, that they know what the Israelis might have done with any that they have moved. But there was also considerable intelligence that they had kept it, in fact, in the Esfahan tunnel facilities that the U.S. appears to have struck. So it remains to be seen if that HEU is in fact in the hands of the Iranians or entombed essentially in that Esfahan facility.
And Najmedin, you talked about the Bushehr nuclear power plant and concerns surrounding that. How are you reading into the situation right now?
There was a report that Bushehr was attacked nuclear power plant, but fortunately it was false and it was basically retracted.
But there are several bases, air bases, and that near Bushehr plant has been attacked or have been attacked, and that I think is the biggest concern. Bushehr nuclear power plant is under the IAEA jurisdiction, and they have had many inspections over there. This is around 1,000 megawatt light water reactor, which is sitting on the coast of the Persian Gulf, and there are two external power lines coming to Bushehr that we call it off-site power. If the Bushehr plant is attacked or those power lines are cut, then we will have a very serious thing. The word serious is the word that also Director General Grossi used in his report to Security Council last Friday. And that reminds me what happened to Fukushima when we had the loss of off-site power. We had problem with the spent fuel pool and also core meltdown.
So how important is it for IAEA inspectors to be on the ground, for attacks to be halted right now, for them to do their inspections?
IAEA inspector, if you're asking me, Mr. Grossi said that they have inspectors, but they need to get permission to go to the site, to Fordo, to Natanz, to Isfahan, or maybe also to Bushehr. As I said, the problem is, and I think it's very serious, Bushehr is sitting on the coast of Persian Gulf. And then a big part of Persian Gulf is used for the water of Persian Gulf for desalination for the Arab countries on the southern part of the Gulf. Any contamination to the waters of Persian Gulf and the water residency is around 2 to 4 years. It's going to be catastrophic.
So there's a chance of massive environmental contamination there. Andrea, people are waiting for the next move from Iran. What do you see Iran doing?
I think Iran is likely to take some kind of a retaliatory move, possibly at the United States, even striking our bases. They had waited around 5 days back in 2020, as your presenter, you mentioned, when we struck Qasem Soleimani. So they may be preparing a response. A more escalatory response would be activating some kind of terrorist cells in the United States or elsewhere. But I think the supreme leader and his advisors have to be concerned that the United States and Israel could simply eliminate the top leadership. They seem to know exactly where they are. And so they have to walk a fine line with any escalation attempts.
Iran has said it may make an exit from the NPT, Non-Nuclear Proliferation Treaty. What are the consequences for that?
Are you asking me or Mrs.
Andrea?
The consequences would be around a 3-month withdrawal period formally for Iran. And it would likely use that to extort the international community and demand concessions. Now, I think any withdrawal from the NPT may also invite additional U.S. or Israeli strikes. So it may not be in Iran's interest. But if it does withdraw, that formally means the end of IAEA inspections in Tehran. And then there won't be any international eyes on what they're doing with their nuclear material or likely nuclear weapons program in the future.
And how do you rate those chances, Najmedin, about Iran making exit from NPT?
That's a very hard and difficult question. As Mrs. Stricker mentioned, Iran needs to file that it wants to withdraw from NPT, and that process of filing will take several months. And with this situation, I think it would not be prudent because withdrawing from NPT implies that they want to go basically dark, and it will be North Korea deja vu.
And Andrea, we talk about the NPT. Some say perhaps the attacks on Iran's nuclear capabilities put into focus Israel's own nuclear capabilities. Very little is known, but it is seen to have that capability. Why isn't the world focusing on Israel joining the NPT?
Well, Israel has always maintained opacity over its nuclear weapons capabilities, and it in fact never joined the NPT, which gives it a little escape from accountability on that. But Israel lives in a very difficult neighborhood, and I think with the attacks of October 7th and all the strikes from Iranian proxies and Tehran itself, really shows that Jerusalem does need a nuclear deterrent. It is the size of New Jersey and really has to be able to defend itself and assure a second strike if someone were to strike it with nuclear weapons or severe conventional force.
But shouldn't all countries, Andrea, have the same rules, observe the same rules? It is a rules-based world that we're after, and suggestions have shown that perhaps Israel has the capability of 80 nuclear warheads.
Certainly in an ideal world, but countries operate according to survival. So they take action to arm themselves. We've seen the same kind of mentality from Tehran, and it's also a tool for power projection, particularly for Iran. It's just the reality of how international security works, unfortunately. In an ideal world, we would all disarm our nuclear weapons and live in peace, but sometimes nuclear weapons can in fact play a stabilizing role.
Before we go, Najmedin, just a final question for you. What are you looking out for? What's most worrying for you?
I'm glad that you raised the issue of Israel again as a nuclear safety specialist. I'm very worried about Dimona nuclear plant and Shimon Peres Nuclear Research Center in Negev Desert. And that is also what I call both Israel and Iran, that they live in nuclear glass houses. Iran has Bushehr, Israel has Dimona. And God forbids, if these two countries start to attack their nuclear facility, nuclear reactors, it's going to be catastrophic for both countries. That's why I sent an email to my mentor, Dr. Hans Blix, the former Director General of IAEA, the legendary Director General. I said Security Council should immediately pass a binding resolution under Chapter 7 of UN Charter, ask for immediate ceasefire and cessation of hostility because of these two nuclear glass houses that Iran and Israel, they live. Dimona in Israel, Bushehr in Iran.
Najmedin Meshkati of the University of Southern California and Andrea Stricker of the Foundation for Defense of Democracies. We thank you so much for your insights today. Now, still ahead this hour, Lipow Oil Associates and JP Morgan Asset Management will be joining us to examine how the latest geopolitical risks are rattling commodities markets. Keep it here with us. This is Bloomberg. We're keeping an eye on oil prices after the U.S. attacked Iran's nuclear sites over the weekend. Oil paring those gains. Currently, Brent crude up about 1.5%. Remember that global benchmark Brent crude jumping as much as 5.7 to 81.40 a barrel at one time. Oil remains the primary focus amid concerns over any disruption to traffic through the Strait of Hormuz. The question is, what will Iran do next? More on the Middle East coming up. Lipow Oil Associates and JP Morgan Asset Management will be giving us market insights as President Trump plunges the U.S. into direct involvement in Israel's offensive on Iran. Keep it here with us. This is Bloomberg.
Well, I encourage the Chinese government in Beijing to call them about that because they heavily depend on the Straits of Hormuz for their oil. If they do that, it'll be another terrible mistake. It's economic suicide for them if they do it. And we retain options to deal with that. But other countries should be looking at that as well. It would hurt other countries' economies a lot worse than ours.
U.S. Secretary of State Marco Rubio telling China it should ensure Iran keeps the Strait of Hormuz open to shipping. IMF Managing Director Kristalina Georgieva, meantime, says the impact of the Middle East escalation on energy supplies and prices is a key concern. She told us more about the rising geopolitical risks facing the global economy.
We are looking at this as another source of uncertainty in what has been a highly uncertain environment. And we are watching for two things. One, how would that impact risk premia for oil and gas? There has been some movement upward. How far would it go? And two, would there be any disruption in energy supplies? For now, no. But let's see how events would develop, whether either the delivery routes or spillovers to other countries may occur. I pray no.
Right. Is the transmission mechanism the channels where you're seeing the biggest Middle East shock in energy prices at the moment?
It is in energy prices, yes. Of course, there could be secondary and tertiary impact. Let's say there is more turbulence that goes into hitting growth prospects of large economies, and then you have a trigger impact in a downward revision of prospects for global growth. As you know, we have already revised the downward growth projections for this year, and we will be coming up with our next projections in July. So far, what we see in the first 2 quarters of the year broadly confirms the picture we have painted in April, and it is somewhat slower global growth, but no recession. It is a very different world today than what we had right after COVID. Right after COVID, we had central banks going in a lockstep. Monetary policy opened up more space for injecting liquidity in the economy. So monetary policy, fiscal policy, all over the world, pretty much doing the same thing. Now we are in a very different place when monetary policy around the world has to go in different directions. We have in some countries monetary policy some tightening. We see some countries actually losing, getting a bit more space through monetary policy. And that, why is this difficult? It is much easier if you can sit in your chair as a governor of a central bank, look around and say, everybody is cutting, I'm cutting as well. Or everybody is tightening, I'm going to tighten as well. Now we are in a place where everybody has to judge on data for their own conditions.
And that was IMF Managing Director Kristalina Georgieva speaking to Bloomberg Sherian in Tokyo. Let's bring in Stephen Stepczynski in Singapore, who leads our Asia energy coverage. Stephen, how much risk premium has been factored in at levels we see today?
You know, you've got, I think if you just look at where we were from Friday, you've got a 13% gain since Israel hit Iran's nuclear facilities. And then today we're up about 2% for Brent oil from the U.S. strike over the weekend. I think the risk premium, yes, it is rising, but we're not nearly at the levels of a worst case scenario. The market isn't really pricing that in. In fact, you know, even though oil is only up it's up 2% or about 1.7% rather, it was up about 5.7 as much as earlier today. So it indicates that the market is becoming a little bit relaxed as they wait for the response from Iran and how Iran responds to what the United States did over the weekend. I think one thing that's being closely watched is the Strait of Hormuz, which is the conduit for about 1/3 of all seaborne oil trade in the world. If that were to shut, banks are saying you could see oil jump to $130 per barrel compared to about $77 and $78 where we are right now. But clearly, that's not being priced in. The Strait of Hormuz is still open, and there are still ships traveling through that waterway.
We talk about the Strait of Hormuz, ships still passing through, but there are ships turning away as well. Talk to us about the thinking.
Yeah, I mean, everyone has a different risk profile, right? You have the Greek government coming out and telling their ship owners and to be careful when going through and have caution. And if you don't need to go through the Strait of Hormuz, then don't do it. Likewise, there might be some ship owners that have ties to the United States, Israel, or Western countries that might want to U-turn or kind of move away as well. There have been 2 large oil tankers in the last 24 hours that have moved away. Whether or not this is a full-scale diversion, or maybe they're just going to wait at an anchorage a little bit farther away from the Strait of Hormuz until they have their loading window ready on the other side. You know, they don't want to get stuck inside just in case as a precautionary measure. You know, Bloomberg did interview at a conference last week the CEO of Shell, one of the world's largest traders of oil and gas, and he also said that, you know, jamming in the area of GPS signals is challenging, and they're also taking cautionary measures and coming up with maybe plan Bs in the case that there is conflict in that region. So I think everyone is trying to figure out what to do, but the fact of the matter is a lot of oil and gas is exported on the other side of the Strait of Hormuz, and there are no other routes. So even if companies are saying they want to be cautious or governments are putting out different notices for ship owners, the fact of the matter is you still need to go through there to get the oil out, and some of the ship owners might just ignore these cautionary notices anyway.
Stephen, fact of the matter as well, there is excess supply out there.
There is, right? If you know, we're in a market that's much frothier than we were perhaps a few years ago when Russia's invasion of Ukraine sent oil prices spiking. Demand, especially demand growth in China, has been relatively subdued. The risk of trade war as well has potentially reduced demand globally. And then you're in a place where OPEC Plus is adding supply to the market as well. So theoretically, if there is a disruption in Iranian oil exports, or if there are delays or some sort of if Tehran, for example, were to target certain ships and that led to delays of oil shipments out of the Strait of Hormuz, then you could possibly see other OPEC Plus members on the other side boost their output faster to try to make up for any lost production or rather lost shipments. But we are in a market that the fundamentals are ultimately bearish. The reason why oil prices have been rising over the last week is squarely on this risk in the Strait of Hormuz. It's the risk in a wider conflict in the Middle East, and it's a risk that Iran's oil sector, which hasn't been hit yet, could potentially be hit by Israel, the United States, and that could reduce output into the market.
Stephen, thank you so much for that. Stephen Stepczynski, who leads our Asia energy coverage. Let's get deeper perspective from Jessica Tea, EM and APEC equities investment specialist at JP Morgan Asset Management. Also with us, Andy Lipow, president at US-based consultancy Lipow Oil Associates. Andy, let's start with you. We talk about how perhaps there's some kind of complacency in the oil market. It's up, what, less than 2% right now? Can it really hang on to those gains?
Well, I think that the oil market is looking and thinking that any retaliatory attack by Iran might be symbolic in nature and not be focused on any oil-producing installations throughout the region or on American forces throughout the Middle East. And as a result, we've seen oil prices sell off since it's opened several hours ago.
The focus right now, Andy, is, of course, the Strait of Hormuz, a key artery for global trade, 20% of global supply. If it is indeed shut, there are alternatives, correct?
Well, there are not that many alternatives, as Steve pointed out, even though there might be additional OPEC Plus supplies that could come to the market. Much of it is coming from Saudi Arabia, Iraq or Kuwait, which is inside of the Strait of Hormuz. So the shutting of the Strait of Hormuz is the biggest issue facing the oil market. And should it completely shut down, we would be expecting oil prices to rally between $120 and $130 a barrel, because the rest of the world's alternative is really to release strategic stocks out of either the Strategic Petroleum Reserve here in the United States or European Union strategic stocks.
Andy, we know that Iran is currently mulling over how it will respond. Apart from the Strait of Hormuz, there are also risks in the Red Sea. How are you assessing that risk?
Well, we know that Iran has proxies throughout the region. And of course, we have seen the Houthis fire missiles at tankers transiting through the Red Sea, and that would just cause more headaches for the oil supply. The fact that we're seeing tankers turn away from the Strait of Hormuz and in the area becomes a de facto supply disruption as less tankers become available to move the amount of oil that would likely be exported.
And Jessica, how are you looking at developments over the weekend? We know that the markets in Israel, in Saudi Arabia, pretty much shrugged off developments. And today, the MSCI Asia Pac Index is down about only 1%.
So indeed, the situation is extremely fluid at the moment, and this escalating in trade tensions, in this situation is clearly impacting the Asian equity market. This has happened, like the global sentiment, investor sentiment. And what we observe is that, yes, in Asia, it's a region which is well known to be a net oil importer. So if we see sustained, inflation, prices, oil prices in this part of the world, this could play negatively for a few markets. But we also want to emphasize that we should not put all the markets in the same buckets, given that some markets in the region are also well known to be net oil exporters. I'm thinking mostly about Malaysia, Indonesia, and even in the case of China. China has diversified more its trade supplies, has more strategic reserves, and the domestic demand for now remains also fairly muted. So that also play as a mitigating factors in this very intense situation. But once again, the situation is very fluid, and we are monitoring very closely.
Have you made any changes? In terms of your calls in this part of the world?
Yeah, that's a good question. So far, no major changes have been brought, simply because most of our investment teams are focusing mostly on the domestic-oriented businesses. So they tend to be fairly insulated from those intense challenges. And also, we want to make sure that those short-term noises will not impact our long-term earnings outlook. We want to make sure that the names that we look at are not necessarily trading on those short-term headwinds. So we have, for example, been more positive on certain areas, such as the Chinese internet space, because they are fairly attractively valued and very oriented, especially towards the consumer demand. We are also positive more on the Indian IT services, on the Indonesian banks, given their resilience. So these are just a few examples which give you flavor on, the type of names that, or sectors that we like. And once again, it's important to keep in mind that not only the domestic stories remain something strong, like fundamentals in Asia remain strong, but also most of the valuations is extremely attractive, especially in certain markets. You can think of Korean chip makers are fairly trading at a discount versus the developed markets. Same for the Taiwanese tech stories. And what we don't think probably more enough is also about the yield story in Asia. So yield in Indonesia, the banks are extremely solid. Singaporean REITs are also yielding a lot. So these are areas that we like in this space.
And Andy, of course, we saw oil surge past $80 a barrel. U.S. consumers have not seen 80 since January. What impact do you think this might have if oil prices stay at those levels?
Well, I think that gasoline prices would continue to move on up another 5 to 10 cents a gallon. But the biggest impact that we're seeing is on diesel prices, that since the end of May, the futures contract has been up about 30% or 60 cents a gallon. And that's very bad news on the inflation front, because not only in the US, but around the world, diesel is the fuel that delivers consumer goods and services. And as a result, that would cause a rise in inflation, which here the Federal Reserve is trying to figure out how to lower interest rates, while at the same time they would be faced with rising energy prices and the potential for increased inflation.
And other countries like India will find it hard to absorb prices at $80 and more. I'm just wondering, at what level would we begin to see demand destruction?
Well, I think you'd really have to go up to about $100 a barrel to really see a significant amount of demand destruction, especially throughout Southeast Asia, India, as well as Africa and Latin America. Here in the US, a move to $100 a barrel, that would move up gasoline prices from about $3.20 to about $3.50 to $3.70. And I think that's a level that is tolerable by the consumer.
Jessica, talk to us about expectations of a correction. Might we see a deep sell-off if we see Iran respond in a significant way?
I think those geopolitical risks are not new, and we have seen historically that the Asian markets do recover from those past shocks and have shown actually quite some resilience. So obviously the short-term volatility, given the very uncertain situation, is probably here to stay. We have seen the market declining, but so far we haven't seen a panic selling across the markets. And we think that, once again, what really matters to us, and we continue to invest based on the earnings outlook, the fundamentals drivers, the return to shareholders returns, and especially the bottom-up stock picking opportunities. So for us, that really remains key for long-term investors who wants to look in the long term at this market.
What assumptions are you making about the dollar? We talk about the dollar getting a bit up because of haven plays, but so far it's only, 1% up since the June 13th attack.
So indeed, given the situation, in the U.S. economic growth outlook, and also the Fed has maintained its rate range. So far, the USD has been more on the weaker side, which typically tends to be a positive factor for emerging markets, especially for the Asian equity market. Historically, Asian equities tend to do better when the USD is weaker. So this is actually providing a tailwind to the equity markets, and we think that this also offers probably more opportunities for further rate cuts in the near future. We have seen a couple of central banks already cutting some, bringing some rate cuts. So that's the case for BSP, the Central Bank of the Philippines. When we look also at the Bank Indonesia, they have expressed confidence in bringing the rates lower throughout the rest of the year. So that should play, both quite well for the Asian equity market, we believe.
What are you making of perhaps the vulnerability of the region from oil prices remaining elevated in terms of the repercussions and the impact on Asian currencies?
Yeah. So yeah, it's. This demands a lot of vigilance. It's important to monitor this very closely. Not every market will be impacted the same way. I think there are varying degrees of influence or impact from those geopolitical risks. What we believe will be crucial for long-term investors is really to focus on those markets or those names, sectors that would be more insulated from those geopolitical risks. So, i.e., focusing more on the domestically oriented businesses, trying to look for also the industries that will benefit from more policy stimulus. I'm mostly thinking about China, for example. Anything that is, for example, tech towards more consumer demand facing would probably be more insulated from those risks. But obviously, it's important to follow that very closely. And so far, all the areas that we have been looking for and looking at tend to be more, benefiting from those mitigating factors. So we think it's important to focus on the domestic consumption, the quality bias, and stay diversified.
And Andy, in the oil market, it is about demand and supply. What do you see OPEC doing?
Well, I think OPEC Plus is going to continue with the restoration of their voluntary production cuts over the next couple of months. They're well on their way to restoring all 2.2 million barrels a day that they had cut several years ago. They have about 800,000 barrels a day more to go. The oil market is well supplied, as Steve had pointed out in the earlier segment. So if it hadn't been for the hostilities between Israel and Iran, we'd see oil prices in the lower $60 per barrel range.
And what assumptions are you making about China's demand that moves the needle in the oil market?
Well, I think the Chinese demand has been tempered, at least the growth has, due to the economic situation that we're seeing, whether it's real estate or construction or other parts of the economy there. So what we're seeing right now is a well-supplied market, especially with overproduction in Kazakhstan, as well as in Iraq, and increases in production out of South America, whether it's Brazil, Argentina, or Guyana.
And Jessica, talk to us about the opportunities in the fixed income market for you in Asia.
So as an equity specialist, I won't be able to elaborate further on the fixed income space. That said, we think it's important, once again, to stay diversified in your asset allocation strategy. And obviously, I mean, the equities have seen some up and downs, but once again, it's important to focus on those unique investment opportunities, and especially having strong visibility on the earnings growth drivers. When it comes to fixed income, I think the situation is also quite fluid with the Fed direction, and also the current geopolitical tension situation. So, yeah, stay invested and stay diversified would be my keywords.
And the best bet for 2025 would be?
Sorry?
The best bet for 2025 would be? Where would you put your money in terms of the markets in Asia?
Sure. So actually, probably looking at Asian income would be very interesting because there are too much uncertainties at the moment. And so probably some long-term investors would like to look for a more defensive profile at the moment. And we think that the Asian income strategy will actually bring some defensive and more value type of opportunities. So I'm thinking mostly about financials, but also some defensive areas such as some Hong Kong utilities or Korean telcos because they're fairly cheap. And finally, also looking at the names that could provide somehow a little bit of growth. So, for example, the e-commerce space, especially in China because they are fairly cheap, could be also other areas of opportunities. So, Asian income
Jessica,
will be
thank you so much
our
for
bet
that.
for this year.
Jessica Tea, EM and APAC Equities Investment Specialist at JP Morgan Asset Management, and Lipow, President Lipow Oil Associates. We thank you so much for being with us. Now, subscribers can also turn to the terminal for more on the tensions in the Middle East. T-Live Go is your function for the latest updates, plus commentary as well as analysis from our expert editors. Plenty more ahead. Keep it here with us. Well, market reaction has been pretty muted to the U.S. attacks on Iran's nuclear sites. Over the weekend, we're seeing some reaction in the oil market, in particular, though, of session highs. The dollar also higher. Traders now awaiting Iran's response to the U.S. strike on its nuclear sites. Brent crude rising almost 2%. Now, before we go, here's a look at our show tomorrow. We'll be speaking with guests from the World Economic Forum's summer Davos meetings in Tianjin about growing geopolitical uncertainties from the Middle East to trade. That is it for Insight. Horizons Middle East and Africa is next. This is Bloomberg.